Hello and welcome to the week of February 26, 2018, the Humble Investor Bull Bear Market Report. My name is Adam Straseske. If you want to grow your IRA, your 401k, or your stock account, I can help. So here's our agenda for today. We're going to go over the broad market readings, the bear market territory, whether or not it's risk on or risk off, correction risk, the stage of the S&P 500, and then of course this week's operating plan. First things first, bull or bear market. We're in a bull market. There's no denying it. The S&P 500 and the All World ex-USA are greatly outpacing Treasuries, represented by this red dotted line down here. Until these two lines, or one of them rather, get below Treasuries, we will be in a risk-on stance. And so this is measuring 12-month momentum on a rolling basis, and we want to be it really focused on the markets. The better of the two. So for example, the MSCI All World ex-USA Index, right here, it's outperforming. That's why we're focused on international indices right now over the US, the different US indexes. So risk on and focused on international markets. When it comes to correction risk for this week, we've got two things going on. Number one, price action alone right here. The bulls look at this and they see a bull flag, and so we see a nice run up in prices. A little bit of sideways price action. They're expecting a break to the upside. However, when you look at breadth, we see a negative reversal here. And so whenever breadth advances, while the price does not, that could be considered a negative reversal. So we do see that in price action. Basically what that's saying is that this is a lower high relative to this one. And the bears are betting that it will come down below here, or at least test this range right here. So price action is a little bit more bullish, whereas the negative reversal on the breadth is a little bit more bearish. And so it'll be an interesting week to see which of those can edge each other out. With that, we are a little bit higher as far as a correction risk than I would say is normal. The stage of the S&P 500, we're still in this broad bull channel right here. After a broad bull channel, we'd expect a trading range. So the trading range really could start, it could come all the way down to this level right here, and then of course be as high as the 2875, or really anywhere in between there. But right now, that is the current range that we're in, and we'll see if we can continue to the upside. We had a chance for a buy trigger last week to get above this bar. It did not. Pretty close, but did not quite make it. So bigger picture still looks bullish right now. We're still in this broad bull channel, and the next thing that we're looking for is a trading range. As far as the operating plan, we still like preferreds. They're a high yielder, and then of course we still like the All World ex-USA Index. And here are our weekly swings. Nothing for the scalps right now. All World ex-USA down 0.43% for the week. Couldn't get that buy trigger, but again, we got close to it, but didn't quite make it. We're going to like this until 1 of 3 happens, either more than a 50% retracement, it starts to underperform the S&P 500, or it gets below Treasuries. So more than likely what will happen is it will start to underperform the S&P 500 before the other two. But we shall see. Until then, we like it. We're bullish on it. UK down 0.79% for the week. We've got an inside bar right here. We've got a stop down here, and we'll see if the bulls can pull it off, get a squeeze to the upside. But not looking at incredibly great for UK. I would have liked it if it would have stayed above this channel. It went back into it, but right now we still like it. Japan up 0.39% for the week. We got the trigger. We've got the stop right here. We've adjusted it up a few times, and so we'll see if we can get a quick test to the high. Oil, one of our winners, bigger winners this week rather, up 3.25% for the week. Nice buy trigger right here. You can see how it ran up, came right down to support where it broke out, and then a nice trigger. This is like a classic textbook example of a nice H1 setup where we have a run in prices, and then a nice pullback, nice buy signal, this one right here, and then the trigger last week. So looks good for oil, still bullish on that. Treasuries, by far our weakest index, and the only reason why I still have this chart up here is because if you look at it in the vehicle that we actually trade, it's within this range right here. It's not quite as far down here. It's not a perfect correlation. Looks similar but not perfect. So anyways, we got a weak buy signal again on Treasuries, so it looks like they're trying to find a bottom in here, and we'll see if that can if they can hold it and get a shot up to the upside. If not, then we're going to get stopped out here pretty soon if it breaks below our support. Australia up 0.47% for the week. We got a swing stop on this one. Second purchase range down in here. Initial stop all the way down in here. So a lot of room to roof for Australia. Still looks good for it. Again, would not have liked to see it come back down into this trading range, but still bullish on it. Brazil up 2.66% for the week. Nice pullback into the, I guess it went down into the trading range, but it's really, really close. Obviously not very far into the trading range. And so it looks good for Brazil right here. We've got a second purchase range down in here, but frankly, if I had to guess what was going to happen, then this thing's going to come up. We're going to end up adjusting the stop loss up, and this is going to be, the second purchase range will be negated. So what we want to do is we want to build in the All World X USA. The weekly swing, what we're looking for is a buy in these three indices right here, and so let's check them out. First one's the MSCI EAFE. We've got a purchase price right in here. We get in and then it comes down for more of an A, and this would be a B and then a C correction, then we will look at a second purchase range down in here if we do get involved with it. But right now it looks good. If it does break above here, our buy trigger, then we'll get in. Switzerland, same thing. I still want it to get above here before we get in, but same premise right here. Buy signal to neutral last week, and we've got support for a major breakout right down in here, and so that's where we'd have our stop. So lots of room to move around. Natural gas was up for the week. It didn't quite hit our buy trigger, but we've got a first initial purchase down on the bottom of the range. If it gets above this week, then we'll definitely look at getting some, and then of course the second purchase range down in here. And this one, natural gas, again, we're looking at this one like we were looking at oil. And again, just bottom, you can see this one traded at the bottom of the trading range, and we were getting in at the bottom towards there, and so that's same thing we want to do on oil. Don't know if it'll pan out the same way, for natural gas. Don't know if that will pan out the same way, but it looks similar. So, and that is it. So have a great week.